YouTube, very good evening. Hope you're doing well. Charles here, Frgnt Daily Chart Analysis, FrgntForex.com, and of course, Frgnt Mastery. Good evening. The time is just approaching 5:30 here, local in Milan. Beginning to wrap the day up. You would have seen, if you do follow me, I posted a very similar breakdown on TradingView. Feel free to check that out. However, I can speak a little bit more freely here on YouTube. Therefore, I figured it'd be only fair for me to do so. So I took a position today, the only position of the day, in being quite honest, because I'm really waiting for price to show its true hand. Had a couple of weeks, couple of months of trading quite aggressively, and was very successful doing it. But as a result of it, I just feel a little bit burnt out. So revert back to the standard way of trading, wait for the DXY essentially to make its move. As you can see here, structure point clearly broken, one structure point in the market. So the pattern in terms of making lower lows and lower highs is seemingly coming to an end. To get that true confirmation, and that would be why we are really seeing a struggle here, would be to have this structure point broken. Then of course, once you get a high in the market, you will then seek to find that higher low before a higher high continuation. Therefore, as I'm seeing the melt at the moment on GU, I'm not particularly fussed. I'm just waiting for price to pull back on GU, waiting for price to pull back potentially on EU as well. AU hasn't really done a lot. In contrast to AU and all these other cross pairs, I also need their structure point to be broken. So the fact I'm not seeing a break of structure here on AU just leads me to believe that potentially GU will be looking to pull back. So no sweat at the moment. Anyway, the reason why you're here, US dollar CAD. So as I mentioned, just under 3% taken on that trade this afternoon. And I'm happy to break it down. Not a problem at all. So higher time frames, I would not, repeat, I certainly would not be looking for a short position based on my higher time frame analysis. And the reason for that is, if you pay attention to my previous videos, I would have mentioned that price has now returned on US dollar CAD to the weekly order block that I foresee will drive price higher. If we look at the DXY has also returned to a weekly order block where I believe that price at some point after this particular break in the market, higher low, where are we looking for the higher low? Where's the liquidity sat? Weekly order block, daily order block refined, after the higher low, higher high continuation. So it's all making sense really to not be looking for a short position on US dollar CAD based on my higher time frame bias. So bear with me. Now, the trading strategy that I use two trading strategies whilst I'm trading. I use my higher time frame directional bias, of which the majority of you will be confused by the different colors on the charts, but if you do get it, fantastic. That is simply order block selection across weekly, daily, 4 hour, 15, and then I've got my other colors such as the yellows that you'll see on my lower, particularly 5 and 1 for my, let's call it, minute type of entry criteria, most of which you'll more than likely see when I am trading my Asia range strategy. And that's what I've done today. So Asia range strategy allows me to revert back to the absolute basics of trading. Pretty much the reason why I got into trading. I just found it quite basic when you think that every pair will trade making higher highs and higher lows, and essentially all you have to do, for example in this example, is look for the lower low, lower high for a lower low continuation. That's really the basics of trading, and I found that really straightforward to grasp, i.e. when the price has clearly made a lower low in the market, I've got no business taking a short here. I've got no business potentially taking a short here. I expect price to want to return back up to an area in the market where the liquidity lies and take another short position, or take the first short position for price to then create what we now see, a new lower low in the market. So it's really basics. Now, if I broaden up that 15-minute time frame for us to take that all into consideration. Now, the Asia range setup does not take into account any of the higher time frame analysis. So regardless of me recognizing that price is in this higher time frame, weekly order block. It's just something that I put to the back of my mind while I'm actively trading the Asia range strategy. It's not a concern whatsoever. All I'm looking for is a break in the market, and it's then down to me to determine where that break in the market has occurred and whether or not there is a 15-minute order block available up at the highs. I now compare that, or I add that onto the chart of the Asia range itself. I won't go into too much depth, and of course this is not a selling ploy. At the moment I certainly do not have an Asia range strategy for you to buy, but I will say potentially coming soon once I really make it to my standard that I want to actually start delivering it, then for sure you guys will have it. But at the moment I'm just sitting on it for now. But what we can see, this is my Asia range, and it's an imperative criteria of that Asia range for that 15-minute order block that has broken structure. In this event, it must be above Asia range, or an alternative of that Asia range criteria is has a point in the market within Asia itself broken structure, and I can determine that by way of 15-minute order block. Well, what I do have here is a 15-minute order block above Asia, and without me giving away the entire strategy in one, I will be kind enough to say above and below Asia is more than likely sat a liquidity pool. Take that as you wish. I won't go into the depths of what a liquidity pool is, but just take it from me that there will be money sat above and below Asia ranges. Therefore, I figured how about we combine the two, i.e. structure on the 15-minute time frame, plus in the fact if there is an Asia range criteria or an Asia range there as well, marry the two up together and we have a very conclusive Asia range strategy. And as I say, I will be completely honest, this is not new territory, this is not groundbreaking information. Asia range criteria are not new. I have not developed Asia range criteria or strategy, but what I have made this one my own by not relying on higher time frame bias, by having in an entry criteria that I haven't seen before. And that gives you the safeguard, because an Asia range criteria, regardless of the fact we say it's only 15-minute only, you still need to have okay, you're not supposed to take into consideration your higher time frame bias, but actually the only way that we have to safeguard ourselves against taking quite an aggressive entry strategy is by having a very solid entry criteria. And that's something that I've built into my Asia range strategy to really safeguard the fact that you're not just relying on the 15-minute order block above Asia and taking immediate shorts. There is a very clear strategy in and around this GAM box that must be adhered to. And if that doesn't occur, then the trade just simply isn't to be taken. So you will see, and if you are in any of my Frgnt groups, that I've been quite reluctant to take Asia range strategy trades for quite a considerable amount of time. And the reason behind that is because I recognize it is a very aggressive way of entering the market. And I didn't feel that we were in times where we should be looking to take aggressive positions based only on lower time frames. So that's something that I guess that's my personal instinct. Whether or not I was right to come up with that bias, I'm unsure. But I have seen there have been Asia range criteria that I have let go. However, on this occasion, I liked it and I felt it fit the bill. It pretty much textbook. So here is the criteria, or at least A and B of the criteria. We've had a below broken 50-minute order block, price came back up, entry criteria in and around these areas. And I'll leave it there, to be honest. So it's a very simple, repeatable process that I use in conjunction with my higher time frame trading. It's just a nice add-on when you quite clearly see that price is bearish. However, my higher time frame directional bias would prevent me clearly from taking shorts today on US dollar CAD. So I think it's certainly a nice addition when you are against your higher time frame trend. But what we can quite clearly see is that trend is most certainly bearish at the moment. So YouTube and everyone else listening, thank you very much for your support across all the channels. I hope that that's helpful. I hope that you don't mind my little selling ploy that I've added in there as well. But it's just another one to add to the collection. Win, lose, or learn. It's something that I don't mind sharing. And the psychology that goes behind that, again, is something that it would be a pleasure for me to share at a later date. But until then, continue to support the YouTube. It's very much so appreciated. And if anyone is interested, of course, in learning the Asia range criteria, at the moment it's something that I teach one-to-one on a mentorship basis. But as I say, at some point in time, there will be an in-depth Asia range course coming out by way of Frgnt Mastery. However, you just have to bear with me. It's not something that I just want to release for the sake of it. I pretty much want it to be perfect. I would like that course, once it's released, to leave you with no question, i.e. you needing to come back to me and ask what this means. So with that, a lot of patience needs to be done, but I can appreciate that you also will appreciate at some point in time, if you are to purchase a course, then you'll have my word that it's going to be very, very, very unlikely that you're going to need me to explain it further once it's in your hands. So just bear with me while I create or put together these live examples. I mean, I do have hundreds of them, but in most recent times, I think it's always relevant to add in more relevant examples in today's market. I mean, you can see this position is being taken when, let's face it, there's a global economic shift going on in the charts. Nothing is pulling back at the moment. We're getting tremendous engulfing moves out of nowhere. That reminds me, I'm still in EG, to be fair, but EG is doing what EG does. I have zero expectation for this whatsoever, so you probably won't even see me talk about that, to be quite honest. But as I say, if I'm able to take Asian range criteria trades now, while we have all the upset in the market, then most certainly when the market has its turn towards more favorable circumstances, then you've seen it here first, and it can be applied. 15 minutes only, lower time frames by way of 5 and 1. If it fits the criteria, it's a trade that should be taken, no questions about it. So again, thank you everyone for your time, your patience, and understanding that my allergies hopefully will subside at some point. But until then, I know you don't appreciate my robotic voice, so I'll leave it at that. All the very best, everyone. Do take care. Charles.